Welcome back to another video, and today I'm here to talk about Celsius stock. Be sure to like, subscribe, and comment down below what stocks you guys are buying. As we can see from today, we had a really good day in the portfolio. We're up $305, a lot different from Friday where we were down a lot. But yeah, as you can see, AMD is rallying right now, up 2.71% on the day. That's looking good. We have over $4,000 in that. Almost 30% of my portfolio. And then also another really big position we just built up because of the recent crash is Elf. Elf we actually built up to $3,000. We have about 42 shares in the portfolio, 21% of the portfolio as well. So yeah, these are two stocks that I'm feeling very good about in these upcoming months, years, decades maybe. A stale otter. This one's up 6% today, actually. I'm not sure why, but this is one that I actually want to build a bigger stake in. I don't have much at all. I want to have that, around where Elf is at. I think just in comparison to where it was, I'm still fine building my position. After this 6% day, in the grand scheme of things, it's not really, a lot. 2021, they were trading for $370 a share. Now they're negative in price to earnings ratio, so yeah, there's a lot for them to recover from. But anyways, let's get into the main part of today's video, which is Celsius. So Celsius stock has had a very rough past year, down 62, almost 63%. All time, this company is great. This amazing company, very fast growth rates. IPO'd in what looks like 2009. This company has done very good things. They've grown at a very fast pace, and they were up here even in 2024. They were at $95. That was their high over here in 2024 at $95, and then from there it was just downhill. I think they hit 90, or what's the 52-week high? They hit $99.62, and since then it's been downhill. They're at $21 right now. They've dropped almost 80% as a company. Their market cap, that used to be a lot higher. Their price to earnings is 30. This is a company that had really high growth rates and couldn't sustain them. And then they just started, it's a falling knife. We're trying to catch a falling knife right here. But with dollar cost averaging, I know that this is a falling knife that can be caught. I'm down 20% on the position right now, but I'm not worried at all. I think that this is a great company that's going to get back to growth soon. Their growth rates are going to be sustainable. They're going to start growing faster and faster. So this is actually a graph I wanted to show you guys. It's the market share of the leading energy drink brands in the United States, and this is in 2023, keep in mind. And Celsius has only grown since then. So as you can see, Red Bull is actually the leader in market share with 39.5%. Monster comes in second with 29.7%. Excuse me. Also owned by Monster are Bang and Rockstar, which combine for around, 8%. And then Celsius has almost 6% of market share, which, if I'm not mistaken, updated in 2025, their market share is more around 12%. Celsius is looking very good. They're growing. They're taking a lot of market share. I think Monster has fallen. I know Red Bull has fallen since then. I couldn't find a graph that was more recent, but I know that Red Bull has fallen and Monster has fallen since these numbers were taken. So Celsius is actually in a very good space. They're growing. They're getting a bigger and bigger market share as we speak. That's a good enough reason for me to invest in a company that's growing in market share. They're growing their revenues quarter over quarter. They did have a bad last quarter. I'm not going to sugarcoat it, but quarter over quarter, they've had it. This is a company that dropped a lot. Their guidance was low for this quarter, though. They were expecting that, and that's reflective of the stock price. But as we can see, there's also a spot where they're going to start, ramping back up. They're going to start getting those earnings per share a little bit higher. We can see there's only 765 employees, which I like. It's a very small company, but it's doing very big numbers. I go to college, so I see a lot. There's a lot of people walking around with Celsius, drinking Celsius. I like Celsius, but they're taking a very big part of the energy drink market, and I don't think it's going to stop anytime soon. This is a company that they're owned by, or big ownership in this company is actually Pepsi. I think Pepsi owns around gosh, I'm not sure what percentage of the company, but Pepsi owns a good amount of this company, and this is their Pepsi's only exposure to energy drink brands. So they're gonna want this to succeed, and I mean, we can see, this is a drink company, right? They have a $5 billion market cap, and then we can check the company that owns them that they could be heading towards this one day, Pepsi, and they have a almost $200 billion market cap, so that's about 40x what Celsius is at right now, which I don't think is really all that impossible. We can see Pepsi's actually not doing amazing the past 5 years either, but they also do pay out a hefty dividend, which helps out. Past 5 years they're at 15%, which still isn't amazing. No, more than 15, maybe 20, but that's still not really that all that good compared to the market. But if we go back to Celsius, we can see that they actually do not pay a dividend, and this is just pure growth company, so that's why I like it a lot. They actually hit a 52-week low, I think. Was it today? No, it wasn't today, but it was very, or yeah, it must have been sometime today. They did actually hit a 52-week low. So yeah, I mean, this is the time to buy Celsius right now. I mean, I don't know how else to say it, but this is a company that's trading for an absolute steal. It is a falling knife that we're trying to catch, but also at the same time, this is one that can go just way up in a very short amount of time because of their growth rates and the guidance that I think they are expecting in quarters to come. And this is a long-term play. We're not going to see this shake out, in 2 weeks, 3 months. This could be 3, 7, 10, 15 years. But I'm ready for that, and I'm happy to hold Celsius. I think they're a great company. A lot of these stocks were falling knives, and they've ever since bounced back. For example, I bought SoFi when it seemed like it couldn't go down anymore right here. It was just going down, and then you had a little bounce, but then it was going down, and then I picked some shares up at around $6. I've averaged up slightly since then. I want to average up more. But I mean, yeah, this is a company that was very hated on, and all of a sudden everything flipped. I also picked up Shopify right after it was a falling knife, and this one has paid out pretty well so far. I picked it up actually right after this. I bought it for $58 a share. I mean, you can see it was down here, and then all of a sudden, sentiment of the company changes. Things can go better. They also have earnings tomorrow. I'm excited to see how that goes. I'm very interested. I think they're going to crush. We'll see. But yeah, guys, I mean, that's all for today's video. I just wanted to say buy Celsius. The stock is falling a lot, but I don't think there's much room for it to fall before it starts going back up. I'm definitely picking up more shares, as many as I can. And with that, guys, I hope you hit the subscribe button, and also comment down below what stocks you guys are buying and what stocks you want to see me cover so that I can do it. And yeah, thank you guys again, and I'll catch you in the next one. Peace.